Welcome to Oz Current News, your go-to channel for in-depth analysis of global events and their impact on Australia. We break down the biggest stories in finance, politics, and world affairs, helping you stay informed and ahead of the curve. If you enjoy fact-based reporting with an Aussie perspective, don't forget to like, subscribe, and hit the notification bell so you never miss an update. Today, we're diving into a topic generating worldwide buzz: Elon Musk's interest in Fort Knox, the United States' most famous gold vault. But why is he so eager to visit? More importantly, why do countries hold gold reserves, and how does this impact their economies? For centuries, gold has played a critical role in economic power and financial security. It has saved nations from collapse, strengthened economies, and in some cases, its mismanagement has led to disaster. So what does this mean for Australia, one of the world's top gold producers? Should we be holding more gold in reserve? Let's dive in. Recently, Elon Musk announced that he and former US President Donald Trump want to visit Fort Knox to inspect America's gold reserves. Musk, now involved in Trump's Department of Government Efficiency, DOE, is advocating for greater transparency in US government assets. One of the biggest questions is, all of Fort Knox's gold actually still there? Fort Knox, located in Kentucky, is one of the most secure places on Earth. It holds approximately 147.3 million ounces of gold, valued at over $400 billion US today, more than half of America's total gold reserves. For decades, conspiracy theories have suggested that Fort Knox may be empty, that the US government secretly sold or misplaced its gold. If true, this would be a massive breach of trust that could send shockwaves through global markets. Musk wants answers, and given his influence, his investigation could force the US government to verify its holdings. Globally, the United States leads in gold reserves with over 8,133 tons. Germany, Italy, and France follow closely, each holding thousands of tons. But what about Australia? Surprisingly, our official gold reserves amount to just 80 tons, a fraction of what other countries hold. However, thanks to high gold prices, our reserves are still worth approximately $6.87 billion. So, if Australia is such a major gold producer, why don't we hold more of it in reserve? Western Australia alone accounts for over 70% of the nation's gold production, making Australia one of the world's largest gold exporters. However, instead of stockpiling gold domestically, the Australian government stores nearly all its gold reserves overseas, primarily in the Bank of England in London. The reason? Strategic trading advantages. Gold stored in global financial hubs is easier to trade and use for international transactions. Unlike Fort Knox, where gold is locked away, Australia's gold is constantly in motion, serving as a liquid financial asset rather than a static reserve. Gold plays a crucial role in national financial stability. Let's break down why countries hold gold and what happens when they mismanage it. Gold as a hedge against inflation. Gold is one of the most reliable safeguards against inflation. When a country's currency loses value, gold retains or even increases in worth. Unlike paper money, which governments can print endlessly, gold has a finite supply, making it a safe store of value. For example, if you had $1,000 in cash in the year 2000, its purchasing power would have significantly decreased due to inflation. However, if you had $1,000 worth of gold, its value would have grown substantially. This is why central banks worldwide hold gold, to protect national wealth during economic downturns. India's 1991 economic crisis. A strong example of how gold can save an economy is India in 1991. The country faced a severe financial crisis and was on the brink of defaulting on its international debt. To prevent economic collapse, the Indian government pledged 67 tons of gold to the International Monetary Fund, IMF, in exchange for a $2.2 billion loan. This move stabilized the economy and restored investor confidence, proving that gold is a crucial financial safety net in times of crisis. Russia's gold strategy. Russia provides another example of gold as an economic shield. Over the last 20 years, Russia doubled its gold reserves, now exceeding 2,300 tons. So when Western sanctions were imposed due to geopolitical tensions, Russia relied on its gold reserves to maintain economic stability. Countries like China and India continued accepting gold-backed transactions, allowing Russia to keep trading despite currency restrictions. This is why many countries, especially those wary of economic sanctions, are increasing their gold reserves. It provides a level of economic independence from the US dollar and Western-dominated financial systems. Venezuela's economic collapse. On the other hand, a lack of gold reserves can have devastating consequences. Take Venezuela, for example. To cover excessive government spending, Venezuela sold off much of its gold reserves, leading to a financial catastrophe. Without gold backing its currency, the country suffered hyperinflation, with prices skyrocketing by over 1,000% in 2018. The Venezuelan bolivar became virtually worthless, forcing citizens to carry stacks of cash just to buy basic necessities. This is a clear warning of what happens when a country fails to manage its gold reserves responsibly. Elon Musk's visit to Fort Knox isn't just about curiosity, it's about accountability and trust in financial systems. If a country's gold reserves aren't properly accounted for, it could shake public confidence and even trigger global financial instability. For Australia, this raises a critical question. Should we increase our gold reserves, or is our strong mining industry enough to sustain our economy? What do you think? Let us know your thoughts in the comments below.